this is exactly why. This is exactly why we're bullish. And I'm not leaving at all. Going live right now. Again and again and again. Come on, YouTube. You got one job to do, and that is to tell my community we are here. Can you do that? Can you do that? I wonder if YouTube can. YouTube, you have to handle an entire army ready to see the price pumping. Today we're full of lives and videos and all of that, so it's gonna be a busy day today. So for those who have the notifications on, it's gonna be a big one. Got a lot of work to do. I'm excited for that. I'm excited for work. This work. The work I like. This work. This is what I like. Watching Fox News right now. Everything is cold. I got my glasses on. Got a little bit of a snack. So where's my... Okay, here it is. The 20 minutes to go, guys. And while I'm got to do a few other things to do, but we're here. We are here. Exciting. It is indeed exciting. You know what? I'm tired of seeing the ads on TradingView. I think I should just buy today's. We still have the Cyber Monday. I think I should just do it. I'm tired of seeing the ads on I mean, just, yeah, I think I'm going to do it because I'm tired of seeing. I know many of you have it. I'm just going to buy it because I don't want to see the ads. What's up? I don't like how YouTube doesn't give me your names anymore and gives me your tag. It's sometimes difficult for me to read it because your tags, you have something else, but 0339, I like what you said, brother. I like what you said right there. It's really good. So it's gonna be a good one. Yeah, I know. CRO, bro. I mean, well done, CRO. Look at this beauty. Not bad. Not bad. I mean, altcoins are the ones that are saying, we're here, baby. We're here. Don't forget about us. Altcoins are right here. Perfect. Atkins, guys. Gonna be speaking. And this is really, really important too. And then we have Donald J. Trump, and then we have Trump with an announcement. So we have a cabinet meeting. Then we have Trump announcement. Yeah, I think it's gonna be a really nice. It's a lot of things to do today. A lot of things to do. All right. So as more people are coming in, welcome. Gotta work on some things as we wait. But here's the conversation today. Paul Atkins. Watch it. After some ads, I think they play some ads.
Our next guest is going to weigh in on crypto regulations, corporate governance, and more. Joining us now, SEC Chairman Paul Atkins. Mr. Chairman, I see
Listen up.
Where you are right now at the New York Stock Exchange. You're going to celebrate, or at least talk about, America's 250th, which is coming up next year. And there's a ceremony at the opening bell. And I was kind of trying to tie together what you do, what we talk about on this show, and how it relates to America's story. And it's capitalism and the rise of the United States have been just inextricably linked. And when you think of the U.S., don't you think, I think freedom, free, because it was such a novel concept, liberty when it happened. And we're talking about free markets. It just goes hand in hand.
It It does. Thank you very much, Joe, and thanks for having me today. So I'm really up here in New York today at the New York Stock Exchange and later on at NASDAQ to really celebrate what you're talking about. We have the 250th anniversary of the signing of the Declaration of Independence next year, which, like you say, is all about liberty and individual freedom and the right to be secure in your property and to pursue happiness. But the thing is that the capital markets have been the engine behind the development of all sorts of innovation, investors risking their money for entrepreneurs to develop their products. And America, in fact, was an investment before it was a nation, because the English investors, British investors, put money into trying to start the settlements, in North Carolina, which didn't work so well, but then came others at Jamestown and afterwards. And so they risked their money to eventually build the nation that we have to celebrate today.
Right. Philosophers have written about the leisure class, and we get to a point where, our academics look around and take everything for granted, and they're able to actually start talking about things like socialism. And it's happening again with our young. I don't know where we're going wrong. 51% think socialism might be superior to capitalism. Maybe they don't remember it. The millions of people affected over, through history, through those ill-conceived notions. What are we doing wrong, Mr. Chairman?
Well, I don't know. I think the main thing is to, focus on the positive, focus and teach people, how we got to where we are today. And obviously there are problems. Every human enterprise has problems. Nothing's perfect. But, we've made huge progress in 250 years, individual liberty for all, and, the prosperity that we enjoy. And that, again, is because people are investing their money because they see a possibility of profit, yes, but also, it lifts all boats, frankly. The developments that come out of risk-taking are huge, that we've developed over the years, airplanes now looking at space and maybe colonizing Mars and things like that. So risk takers are there, and young folks are taking risks as well. So I wouldn't so much focus on on the isms as much as what is driving our forces. And so here, with respect to the United States capital markets, I want to make sure that we're modernizing our rule book, making sure that we are keeping pace with where we should be as far as ease of raising capital. We today have more or less half the number of public companies that we had 30 years ago. And so we at the SEC are taking steps to address that, try to make IPOs great again was what my goal is. And so we're kicking that off as well here in the new year.
Mr. Chairman, we've talked a lot lately about how gambling and investing are blending in some ways. You see it with the gambling sites, you see it with predictions markets, and I realize that's the CFTC, not your purview in terms of the prediction markets. But we even talked yesterday with Amy Silverman, who just talked about how you do see much more activity in these future markets on things like options and puts that expire within a day. What's your thought on that? Because your job is to make sure that investors are protected. Is there too much of a blend between investing and gambling, or do you think this is something that's manageable?
Well, I do think it's manageable, and I'm focused on the capital markets, and I'll leave my colleagues at the Commodity Futures Trading Commission to look after the futures and derivatives markets. And so, but risk-taking, there is a continuum from, from more long-term things to more short-term as well. But, that's inherent in humans to take risks, and others more embracing of it than others who might just stick their money under their mattress. But what we want to try to focus on, and what I hear when I travel abroad.
What's up, everybody? Welcome. No more ads. Yay! No more ads. Just got it, guys. Just got it. I had to. All right. So we got premium trading view. Can you believe this? All this time and no premium. It's like you telling me, get YouTube premium. And I'm like, wait. All right, we're going to be listening to Paul. Oh boy, it's ready. He's coming in about 10 minutes. They're playing some music, but I cannot because copyright. Or super copyright. So yeah, it's coming in live soon, guys. We'll be watching in about 10 more minutes or so. He's going to be giving a speech. I think it's going to be very important. So that's why we're here. In the meantime, he spoke earlier today at the he was discussing with Squawkbox. So it's very nice. Big things.
In Europe and Japan, for example, is everybody looks with.
That's their audio, right? That little squeaking sound. Sorry about that.
Envy and at our
89,000.
What we
Whoa.
have achieved here in
Doing
the
it.
risk-taking attitude, the investment culture that we have ingrained, and that really is lacking in other cultures.
Oh,
and
yes.
So that is the thing that is a great asset for the United States that has built our capital markets.
Look at that.
Provided capital for entrepreneurs to build towards their dreams, and then to have their investors share in those in building those dreams and making products that people want and people need and people are willing to buy and use.
On the proxy advisors, shareholder voting, and issues like that, it almost looks like you are trying to roll back a lot of the what some would think.
By the way, everybody, welcome to the new December BTCC 2500 XRP giveaway. If you remember, for October, we had 3,000. November, we had 2,000. December, the last month of the year, we're giving 2,500 XRP giveaway. You know by now what to do, guys. The link is down below. The link is on the top of the chat. Join us. Trade up. Get it ready. Pump. Make that money. If you want, of course, it's risky, but everything is a risk nowadays. So, yeah, we're giving you guys 2,500 XRP to one winner. This is the previous winner. We're going to have all the winners soon. I already told my team. So, yeah. Kudos to you guys, and I just want to tell you that we appreciate you a lot. We appreciate you a lot. I already emailed the winner. I believe I haven't heard from the winner. So far, if you won November, let me know because I already sent you an email. So let me know. But yeah, just the facts.
Or ill-conceived notions of ESG, DEI. Et cetera. You got
crypto's pumping, everybody.
You got shareholders that represent less than a percentage of a company's outstanding shares, bogging down management with proposals. You've got passive investors like Vanguard or BlackRock, where the CEO can actually say, "Gee, this is the way I feel about these social issues, and I'm going to vote the shares of a passive investment with what my interests are in mind." How did we ever get to that point without thinking this is insane?
Well, it's interesting. I mean, things have changed a lot. When I was, I've been now at the SEC 3 times, over the last 3 decades. But in the early 90s, when I was there for 4 years, the individual investors made up more than half of the market capitalization of the U.S. markets, holding stocks directly. Now things obviously have changed. They've gone to holdings. People have ETFs and mutual funds and all sorts of other things. So that's great. And the people are invested in the marketplace, saving for the long term. But I think it's time to modernize our rules, and things have been allowed to, if you've ever had a boat and have barnacles on the hull, it's time to scrape off those barnacles and make our ship be able to sail, quickly through the waters. And so that's what we're setting out to do with SEC, and they're basically 3 things that we're looking at to try to make IPOs great again. One is to modernize our rule book, to make sure that our regulations are fit for purpose, to help small companies and large companies attract capital. Second is to look at our litigation situation, with respect to, the strike suits and other sorts of frivolous actions that really impede, I think, people from wanting to be public. And then finally, the corporate governance governance issues that you were alluding to, where we have things that take so much time, various precatory proposals and whatnot that are, that really don't get adopted by shareholders and create, I think, more noise and are weaponized by particular special interest groups and that sort of thing. So we need to get back to basics, make sure that our rule book is fit for purpose and helping to make our capital markets as efficient and growing as possible.
Can you do what needs to be done with crypto without legislation? And do you think that can happen before the end of the year?
Well, we'll see. We're working with Congress and we're providing what we call technical assistance to them regarding legislation to make sure that they're staying on what makes sense and that meshes with other laws and whatnot. But we'll see. I can't prognosticate that, but we have enough authority to drive forward. I'm looking forward to having an innovation exemption that we've been talking about now. We'll be able to get that out in a month or so is what I'm hoping. We were impeded a bit by the government shutdown. Obviously, we couldn't work on things during that time, but we're on track and we will be able to forge forward with the crypto area and
big things are coming to crypto. If you didn't panic sell, if you held the line with me, if you're here solid and steady, trading, buying, DCA, you're going to make money, guys. Oscar, why are you saying that? Because we went through so much hell and struggle. And you're seeing right now, people are getting a little bit more confident, more cocky. They're hearing today Trump speaking. We're going to be watching a lot. There's a lot of lives happening on this channel today. So subscribe, like. We're going to be hearing from him in about 4 minutes. A lot of music right here that they are pumping. So, wow, so much music right now. Good. So I cannot play for copyright reasons, but yeah, we're just finishing up with him. He was talking just earlier today to CNBC.
Make sure that we are able to embrace this new area of innovation that for too long the United States basically has just pushed back against. And so I'm looking forward to having rules that are focused on helping that sector of
get on
move forward.
Come up and make IPOs greater. MIPCA?
What in the world is he saying?
It doesn't have the same ring. What can we do about that?
Yeah, right. So my PIGO maybe. How about something like that?
That might be. Yeah, it's amazing that the number of public companies that we don't have anymore. Is that the rise of private equity? What is that? And is it healthy?
Well, I think many factors. Obviously, it's been the rise in the private markets are much more fluid and liquid than they ever have been in the past, with institutional money going in there and others. And so I think that's a good thing that provides, a good outlet for especially venture capital, obviously, and private equity. But again, when you go back and look at how we have, we're down 40% or so from, 30 years ago of the number of listed public companies. We need to look back at why that is and what causes
Baby,
that.
let's
So
go.
yes, there's an alternative. But secondly, I believe
Make that money.
Again, all these barnacles that have gotten on our hull,
Make that money.
we need to get those stripped off so that things can be more efficient and attract capital back to the public markets.
You're down there. You'll be here later, right? I mean, you're not leaving the NASDAQ out, obviously.
Yep. We'll be at the NASDAQ later this afternoon for closing.
5% right now. 5% right now pumping. That is a nice pump. Not bad. A lot of people are making money today, huh? A lot of people are making money today. All right, so this is going live right now. About 1 minute to go, guys. About 1 minute to go. I hope you listen to this one because this is a big one, guys. Big one. I mean, people are getting bullish. People are getting bullish. I love that. Okay. Oh, baby, come on. Gotta get that XRP, huh? You gotta get that XRP 100%. 100%. Now, remember, 48 hours ago, we were looking at 2.20, so we're still down. We gotta come back up fast and furious, quickly. We're still down, but better to buy the dip, to buy the blood on the streets, right? You know that. You know that for a fact. So we got BTC and XRP on the screen. I hope you liked it. Just bought that membership, so want to show you and give you more. Plus, not showing the ads because I think they were so frustrating right now. So no more ads. Good stuff. Good stuff. Yeah, there's a lot of sound right now. Sound is powerful and awesome. And I'm watching Fox right now, which is good. And after this, I gotta do work. And after that, I'm gonna come back for Donald J. Trump on the cabinet meeting. So drop a like, guys. Subscribe to the channel. Turn on the notification bell button. Welcome, planets. So happy to have you guys. Welcome, planets. Who do we have here too? We got Chipper. What's up, my Chipper? Good to see you, brother. We got Planet Chipper, Planet Chipper, or just Planets and Chipper today then. Thank you, guys. Love you. And a bunch of members. Thank you, guys, for being here. Are you guys ready? Oh, yeah, this is good. This is good. Oh, there it is. All right, guys, listen up to the SEC, Securities and Exchange Commission Chairman, Paul S. Atkins. This is what we need. This is what we need. And the market is receiving that really strongly. I think that's what you want, right? You want money. You want money. You want to see goodness. Well, there you have it. Always down to watch and listen because we're in the market right now. We're all in. We're really, really, really all in. What's up, Dakota? Good to see you. Welcome. All says hello. All right. Someone said, no, this is not what we need. I disagree. Big league. This is what we need. What's up? What do we expect from this meeting? Well, this is a conversation. It's not a meeting. Paul Atkins is the SEC chair. What?
Ladies and gentlemen.
Oh, my goodness.
The president of the New York Stock Exchange, Lynn Martin.
Oh, well, that was loud.
For those of you who just saw me run on the floor, you know I can actually run in these shoes, so. All right, good morning, everyone. I love seeing a full boardroom. I'm Lynn Martin, I'm president of the New York Stock Exchange, and it's my honor to welcome so many distinguished leaders from the public and private sectors this morning to our iconic building as we look forward to the future of capital markets. As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's most dynamic and the world's greatest economy. Those are transparency, investor confidence, and a commitment to innovation. Those hallmarks are what make the American capital markets the greatest in the world. Now, these principles have served us well for nearly 2.5 centuries, but they must continue to evolve to meet the needs of a global and a technology-driven forward marketplace, such as the one that exists today. At the New York Stock Exchange, we're actively engaged on key regulatory initiatives, from market structure reforms to disclosure modernization, working closely with this administration and policymakers to ensure that the U.S. remains the world's financial capital. We've participated in SEC roundtables on innovative new markets, and in addition to that, we've submitted a variety of comment letters reflecting our public company community's views on executive compensation reform and other matters. And we're actively surveying our issuers as we prepare for potential rulemaking on additional modernizations such as semi-annual reporting. Now, these efforts reflect our unwavering commitment to strengthen our capital markets so that they remain the envy of the world. To fuel growth and innovation for generations to come, we look forward to working with the SEC in advocating for a simpler framework for public companies. Now, the fact is that the number of public companies has significantly declined over the last 30 years in spite of multiple golden ages of innovation in this country. The refrain around the cost of going public has never been louder than from those CEOs that we talk to every day who are weighing the benefits and challenges of being a public company. The cost of public market disclosures has never been higher, and that, coupled with the outsized role that proxy advisors are playing, sadly causes the private companies to think twice about going public, therefore limiting everyday Americans from living their version of the American dream by investing in those companies. At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies. And that is why we are thrilled today to welcome SEC Chairman Atkins to the New York Stock Exchange, where we are proud to serve as a backdrop for his public address on strengthening U.S. capital markets for the next 250 years. Chairman Atkins has long championed policies that balance investor protection with market vitality in his long, storied career in the private sector and in public service. Given his extensive experience, Chairman Atkins has a unique perspective on how regulation can foster innovation while still safeguarding markets. And his leadership comes at a pivotal time as the SEC explores ways to revitalize the IPO market, modernize disclosures, and ensure the U.S. remains the envy of the world. On the cusp of America's 250th anniversary, Chairman Atkins will reflect on the enduring principles that has powered the world's most dynamic economy, and also outline the SEC's efforts to strengthen U.S. capital markets. If everyone will now join me in welcoming Chairman Paul Atkins to our stage.
Help us bump, Paul. It's in you. What's up, Ghost? Welcome. Everybody, welcome, guys. Drop a like and let's go.
Thank you. Thank you all very much. And good morning, ladies and gentlemen. And Lynn, thank you very much for your generous introduction and for hosting us here in this beautiful room and, as you mentioned, in this iconic building. And my thanks as well to the market participants here today. And of course, I'm grateful to see my counterparts from the administration. And thank you all for being here and for your understanding that the views that I express today are in my capacity as chairman and do not necessarily reflect those of the SEC as an institution or of my fellow commissioners. So there are a few places more fitting to consider the future of the American financial system than this one. The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. Listen closely and you can hear the hum of human ingenuity that has long echoed within these walls. Echoes that ring loudly around us today. And then step outside, meanwhile, and the neighborhood itself narrates the American story. A short walk in any direction brings you to landmarks like Federal Hall, where George Washington took his presidential oath and Congress established the Treasury Department. To the buttonwood tree under whose ancestors about 24 stockbrokers established the forerunner of this exchange. And to the cobblestone streets that were a cradle of commerce long before Manhattan's skyscrapers rose above them. The square mile that surrounds us here today is less a place than a prologue, an opening chapter in a story that is now ours to continue. So, of course, in 7 months, that story will reach a rare milestone when our republic marks its 250th year. A quarter millennium ago, a band of revolutionaries declared that rights are neither permissions to be earned nor privileges to be revoked. They claimed the right to govern themselves, yes, but also the right to provide for themselves, to work, to venture, and to prosper off their own efforts, to pursue happiness and property. Indeed, our founders sought agency as much in the halls of power as in the marketplace of ideas. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect and, of course, but no less, to resolve, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited. Allow me then to take a few moments to revisit how that legacy began. Before the United States was a nation, it was actually an investment. The first permanent English settlements in this hemisphere were financed through joint stock enterprises that allowed people to pool together and share in the risk and the reward of a very uncertain venture. The Virginia Company, for example, the first major British securities offering aimed at the Americas, funded the Jamestown settlement through share subscriptions, investors of which anticipated returns through land, trade, and dividends. Decades later, a similar structure funded the settlement that became this great city, foreshadowing New York's destiny as a global capital of the securities markets. Indeed, what is now modern-day Manhattan originated as a corporate investment project. We have with us this morning a copy of the company's original stock offering, New Amsterdam's birth certificate, you could call it, and a tangible reminder that Manhattan itself was built on the premise that prosperity flows from mobilizing capital toward its most productive uses. That premise, of course, and the financial system that it engendered is rooted in still older foundations dating back to the Glorious Revolution, when Parliament wrested arbitrary power from the Crown and established the principle that property rights would be protected, contracts enforced, and the state bound by predictable rules rather than royal whim. Britain became a financial powerhouse by creating the conditions in which markets could flourish. Our founders inherited that worldview and then forged a more perfect union, perhaps none more than Alexander Hamilton, across from whose burial site we assemble today. Hamilton understood that markets, structured properly, can unleash the might of American dynamism as no monarch or government ministry possibly could. After all, a free market is a hallmark of a free people. And as Dr. Ludwig von Mises described so well, quote, "If history could teach us anything, it would be that private property is inextricably linked with civilization." So in Federalist 11, Hamilton praises the adventurous spirit which animates the commercial character of America. Quote, "That unequal spirit of enterprise which signifies the genius of American merchants and navigators, and which in itself is an inexhaustible mine of national wealth," unquote. And then he heralds its potential to make America the admiration and envy of the world. So Hamilton saw in that adventurous spirit a precocious young nation whose people could produce their own prosperity. To be sure, he believed that the government must create stable rules, maintain public credit, and reliably enforce contracts. But within that framework, the securities markets would emerge to unlock the most daring mobilization of capital in history. The canals that tied the interior to the coasts were financed by state bonds. The railroads that stitched together a continent required investment on a scale that the world had never seen, creating secondary markets, auditing standards, and the modern corporate governance structure in the process. The steel that built our cities, the oil that powered our factories, and the electricity that illuminated our homes were all made possible by domestic and foreign investors willing to stake their capital on an idea of America still in formation. Now, of course, we must recognize with humility when we as a country failed to uphold some of our most basic founding principles. But by the turn of the 20th century, millions of Americans owned securities and had a framework for the achievement of their ambitions. Indeed, the wealth accumulated through the financial markets became an accelerant of social mobility. As the century unfolded and competing ideologies sought to engineer economic growth from the top down, ours was a model that steadily proved its value on the global stage. The Soviet and communist system of central planning, coercion, mass murder, seizing private property, and suppressing private enterprise, for example, collapsed under the weight of its own contradictions, while the American approach empowered its citizens to innovate, to invest, and to build wealth within predictable and enforceable legal frameworks. To redraw the boundaries of the possible by inventing the telephone and the phonograph, the assembly line and the aeroplane, the semiconductor that made computing ubiquitous, internet protocols that connected the world, and GPS technology that then plotted it. Social media platforms that carry information at the speed of thought. And now, the new frontier of artificial intelligence that is transforming the way that we live and work. Across this long, sweep of innovation, a pattern emerges with clarity. The great leaps of American life were always produced by a willingness to tolerate and to accept risks within a system that rewards those who take those risks. Our prosperity is no accident of history, nor is our primacy assured in the future. The 20th century was a triumph of economic freedom over doctrines that sought to constrain it. But principles do not preserve themselves. Freedom is not a relic that we inherit, so much as a responsibility that we assume. And in recent years, our regulatory frameworks have veered from the founding ideals that helped the United States to stand without peer as the world's destination for public companies. So for context, Congress, beginning in 1933 with the Securities Act, passed a series of legislation to address the fraudulent and manipulative activity that Wall Street engaged in prior to the 1929 stock market crash. Congress's enactment of the securities laws at the federal level sought to provide more clarity in the markets in the name of rebuilding public confidence in them. After all, markets require trust, and trust requires transparency. Shortly before the Securities Act became law in 1933, President Franklin Roosevelt explained his vision for this seminal statute in a message to Congress. He rejected the idea that the federal government should be a merit regulator, which is the notion that the government approves an offering of securities as sound for public investment. Instead, President Roosevelt sought to protect investors through a disclosure-based regulatory scheme. The idea that companies offering securities to the public should provide all important information about those securities. In short, the Securities Act preserved the Hamiltonian model by incentivizing capital to flow to opportunity based on the judgment of investors, not of government bureaucrats. In the same message to Congress, President Roosevelt explained that, quote, "The purpose of the Securities Act is to protect the company and protect the public with the least possible interference with honest business," unquote. But as the generations passed, the federal government's natural tendency asserted itself. Rules multiplied faster than problems that they were intended to solve, and in its drift away from original congressional intent, the state sought to substitute its discernment for that of market participants. Shortly after I left the SEC as a staff member in the mid-90s, there were more than 7,000 companies listed on U.S. exchanges, from small cap innovators to giants of industry. Yet by the time that I returned as chairman earlier this year, that number had fallen by about 40%. So what happened during those decades, I think, tells a cautionary tale of regulatory creep. A tale that tells us that the path to public ownership has become narrower, costlier, and overly burdened with rules that often create more friction than they create benefit. These trends have eroded American competitiveness. They've locked average investors out of some of the most dynamic companies, and they've pushed entrepreneurs to seek capital elsewhere, either in the private markets or overseas. This decline is not inevitable, nor, I think, is it now irreversible. While there are many SEC rules and practices that have amassed over the decades and certainly are ripe for reform, perhaps none epitomize regulatory creep more so than the voluminous disclosure requirements in the Commission's rulebook today. Over the years, and particularly over the past 2 decades, special interest groups, politicians, and at times the SEC itself have weaponized the disclosure regime that Congress itself created for our marketplace in an effort to advance social and political agendas that stray far from the SEC's mission of facilitating capital formation, protecting investors, and ensuring fair, orderly, and efficient markets. These decades of accretive rulemakings have produced reams of paperwork that can do more to obscure than to illuminate. Today's lengthy annual reports and proxy statements improve substantial costs on companies because they consume significant time from boards and from management and require armies of special lawyers, accountants, and consultants to prepare. Despite these costs, investors sometimes do not benefit from the information because they struggle to parse and to understand it, or they find it so intimidating because of the volume and the density that then they just ignore it. One of my priorities as chairman is to reform the SEC's disclosure rules with two goals in mind. First, the SEC must root its disclosure requirements in the concept of financial materiality. Second, these requirements must scale with a company's size and maturity. With respect to that first goal, the Supreme Court has enunciated an objective standard for materiality and explained that information is material if there is a substantial likelihood that a reasonable shareholder would consider it important in making an investment decision. Achieving this goal necessitates restraint and care from both the SEC when it promulgates a rule and from Congress when it directs the SEC to mandate disclosure on any particular subject. Our capital markets thrive not through volume of disclosures, but from the clarity and importance of them to investors. In writing for the court, Justice Thurgood Marshall cautioned, and I quote, "Some information is of such dubious significance that insistence on its disclosure may accomplish more harm than good. And if the standard of materiality is unnecessarily low, shareholders may be buried in an avalanche of trivial information, a result that is hardly conducive to informed decision-making." So he wrote that in 1976 on the bicentennial. In heeding this warning to avoid information overload for our investors, our disclosure regime is most effective when the SEC provides, as FDR advocated, the minimum effective dose of regulation needed to elicit the information that is material to investors, and we allow market forces to drive the disclosure of any additional aspects of their operations that may be beneficial to investors. So in contrast, an ineffective disclosure regime would be one where the SEC requires that all companies provide the same information without the ability to tailor the disclosure to their specific circumstances, with the only view that such information should be consistent and comparable across all those companies. So indeed, with today's numerous disclosure requirements, companies still provide additional information, such as non-GAAP numbers or key performance metrics that are tailored to a company's business or industry and are driven more by investor demand than the SEC's rulebook. So good for them. When the SEC's disclosure regime has been hijacked to require information unmoored from materiality, though investors do not benefit. In his recent and final Thanksgiving letter to shareholders, Warren Buffett highlighted a prime example of this hazard. Any summary I give could not do justice to Mr. Buffett's own words, so I'll quote for you the following excerpt from his letter. So quote, "During my lifetime, reformers sought to embarrass CEOs by requiring the disclosure of the compensation of the boss compared to what was being paid to the average employee. Proxy statements promptly ballooned to 100 plus pages compared to 20 or less earlier. But the good intentions didn't work, instead they backfired. Based on the majority of my observations, the CEO of Company A looked at his competitor at Company B and subtly conveyed to his board that he should be worth more. Of course, he also boosted the pay of directors and was careful whom he placed on the compensation committee. The new rules produced envy and not moderation. And this ratcheting took on a life of its own. So I share Mr. Buffett's observations and concerns, which is why earlier this year, the SEC held a roundtable that brought together companies, investors, law firms, and compensation consultants to discuss the current state of the agency's executive compensation disclosure rules and potential reforms. Somewhat to my surprise, there was universal agreement among the panelists that the length and complexity of executive compensation disclosure have limited its usefulness and insight to investors. So we need a reset of these and other SEC disclosure requirements, and this roundtable was one of the first steps to execute my goal of ensuring that materiality is the North Star for the SEC's disclosure regime. My other priority with respect to the SEC's disclosure rules is to scale the requirements within the company's size and maturity as a public company. Balancing disclosure obligations with a company's ability to bear the burdens of compliance is particularly important where Congress has directed the SEC to promulgate disclosure rules whose costs may have a disproportionate impact on some companies. Of course, this approach is hardly a novel concept. The Commission first provided tailored disclosure requirements for smaller public companies back in 1992 when my former boss, Richard Breeden, was chairman. And that was during my first tour of duty at the SEC as a staff member. And then 2 decades later, Congress, through the Bipartisan Jobs Act, gave certain newly public companies an IPO on-ramp, so-called, and permitted them to comply with some of the SEC's disclosure requirements on a delayed basis. It's time to revisit these concepts that have proven effective and that merit expansion. As part of this effort, the SEC should give strong consideration to the thresholds that separate large companies, which are subject to all the SEC disclosure rules, and small companies that are subject to only some of them. The last comprehensive reform to these thresholds took place 20 years ago in 2005. This dereliction, let's say, of regulatory upkeep has resulted in a public company with a float of as low as $250 million being subject to the same disclosure requirements as a company that's 100 times its size. For newly public companies, the SEC should consider building upon the IPO on-ramp that Congress established in the Jobs Act. For example, allowing companies to remain on the on-ramp for a minimum number of years rather than forcing them off as soon as the first year after the initial offering could provide companies with greater certainty and incentivize more IPOs, especially among public companies, among smaller companies. American entrepreneurs built the most dynamic economy in history, in part by taking their companies public and by sharing rewards with workers, savers, and investors. Reviving. If we want the next generation of innovators to choose our public markets, we need disclosure that is calibrated to a company's size and maturity. That is driven by market demands and to the extent mandated by the SEC that is rooted in materiality and not the whimsical social or political agendas that might exist. So of course, disclosure reform is just one of 3 pillars of my plan to make IPOs great again. A second pillar involves depoliticizing shareholder meetings and returning their focus on voting on directorial elections and significant corporate matters. And finally, we must also reform the litigation landscape for securities lawsuits to eliminate frivolous complaints while maintaining an avenue for shareholders to continue to bring forth meritorious claims. At the SEC, we've been hard at work on executing on this plan, and we look forward to soon sharing the progress that is taking shape. Raising capital, through an IPO should not be a privilege reserved for those few unicorns. More and more public investments are concentrated in a handful of companies that are generally in the same one or two industries. Our regulatory framework should provide companies in all stages of their growth and from all industries with opportunity for an IPO, particularly an IPO that represents a capital raising mechanism for the company instead of a liquidity event for insiders. Now, the reforms that I've just outlined are a worthwhile and necessary beginning. They will help capital flow faster and more freely to its highest and best use, which is to say towards initiative and ingenuity. And they will help us guide the SEC back to the bedrock pecuniary fundamentals on which our mandate at the SEC is based. But these are only the first steps in a broader effort to realign our markets with their most fundamental purpose, which is to place the full measure of American might where it belongs, in the hands of our citizens instead of the regulatory state. As we look towards America's 250th year, let us remember that no nation has ever entrusted so much agency to the individual, and no nation has been so plentifully rewarded for it. And yet, even as the weight of history and evidence affirm this truth, some in our society have come to question whether the capital markets remain the most reliable engine for upward mobility. They presume that the politically prescribed allocation of capital is superior to that of free markets. They call to seize the means of production. They contend, often through artful, alliterative slogans, that decisions made by the government are more efficient and more just than those made by the governed. They ask, can capitalism propel people past the circumstances of their birth or background? Can it reflect our highest values? So I, for one, believe emphatically that it can, and that history has proven it. For at its best, capital is the instrument through which an individual can marshal the resources of a free society in pursuit of shared prosperity. It's the instrument through which we can create value in the lives of others by creating value in our own. Indeed, our markets are a deeply moral enterprise because they are a mutually beneficial one, because every exchange holds the potential to lift both parties, because our markets affirm the dignity of the human spirit and liberate the potential to invent, to build, to innovate, and to flourish as no other alternative can. So this is precisely why our work at the Securities and Exchange Commission matters. Because when our capital markets are strong, they amplify that sense of dignity on a global scale. Because no force has lifted more people from poverty, widened more paths to opportunity, or solved more of society's most intractable problems than capital investments through our capital markets. So in the coming months, we at the SEC will pursue the reforms that I've discussed today and several others with the urgency and the care that they command. We will work closely with Congress and the administration. We will listen carefully to market participants and to investors, and we will proceed steadily with the confidence that comes from standing on sound principles and a clear mandate. But above all, we will proceed with a resolve worthy of a people ever agitating to be prosperous. So in closing, I believe that our capital markets are more than just the mechanisms of finance. They are, at their core, expressions of our national character. A character that has compelled generations of Americans to take risks and to reap the rewards, to innovate endlessly and restlessly, to believe that the future is ours to make. So as America's 250th anniversary approaches, the question before us is not whether our entrepreneurs have the capacity to reinvent and reinvigorate our capital markets, but whether we as regulators have the will. In this new day, the SEC and under President Trump's leadership, I am pleased to report that we do. Indeed, I'm confident that we will preserve the promise of our capital markets for the next quarter millennium and well beyond that. I trust that we will summon anew the enterprising spirit that Hamilton divined would be the source of our strength. And I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter. So thank you all very much for your time today. You all have been a patient and indulgent audience, and I look forward to working with you all and to achieving the work ahead of us. So thank you very much.
Awesome.
Thank you. Thank you. Thank you very much. Thank you.
That is your SEC chair, Paul Atkins. Now, a few seconds on this. This guy is powerful. Last time that we had an SEC chair that made headlines was not really for the right reasons, and you know who that is? Gary Gensler. He killed us. He destroyed crypto. Him and Elizabeth Warren are nightmares. And you know, they delayed the progress, and they delayed. They got us to into lawsuits. Ripple was chained and in purgatory, basically. I mean, bad. Coinbase, MetaMask, Uniswap. Everybody got sued. I remember seeing that years ago. Maybe you're like, why is crypto not bumping right now? Dude, you haven't seen 11 to 10 companies, crypto companies, getting sued and Wells notices from the SEC. We're not like that anymore. We're thriving, right? But we're not pumping. Can you please be patient for once? Like what we just heard from the head of the SEC, obviously he said that his views do not reflect the SEC, of course, although he's a chair. I believe, man, the United States, the American country, our market, guys. You can see right now, even in the reaction to the price, how people are trading, people are making money. But Oscar, are they going to sell? Yes, of course people are going to sell. Don't you know? Like, you sell, you take profits, you buy. You do you. You do you. Right? I mean, you want to sell, go ahead and make money. I don't care, right? I mean, it's fine, it's your money. But I wouldn't sell, because if you sell right now, you're just leaving money on the table. But it's up to you. I think Paul Atkins and the incoming Fed chair are going to be essential for crypto to do really well in 2026. I'm ready to see that, because we have the positions, we have the bags, we have the strategy. And look at that. Look at XRP. Look at XRP. Everybody, don't you not pump it up. I want everybody crazy right now in the chat. Let's go. Drop a like, guys. Look at this beauty. We have Trump coming in a couple more minutes. Oh my. Oh my. Oh my. XRP, baby. What is this?
I think Bitcoin is one of several risk indicators.
Oh man, this is super low audio. I hate when they don't have good audio, man. Come on, bro. It doesn't count. It doesn't cost much to have good audio. Look at this one. Even Chris. Crypto.com. What's up, Crow fam? Welcome. Man, we're good. We're good. And you know what's coming? You know what's coming. Starts with C and ends with C. I just realized that. Starts with C and ends with C. Can somebody tell me in the comments what I'm talking about? Starts with C, ends with C. It's the easy one. That is gonna give us so much pump, guys. Hey, you said it. You said it. Clarity Act. Oh my goodness, I'm so stupid. Okay, I'm gonna take that out. I thought it was. Oh my goodness. Cut it. Cut it. Cut it. Too early. I need my food. Quantitative. Oh my goodness. No, I'm just gonna. I'm gonna act like that never happened. Crypto Clarity. Clarity Act, everybody. Clarity Act. Yes, clip it. I know somebody's gonna clip it. I know. Love you, fam. Clarity. Hey, I like you, M Show. That's what I'm talking about. Clarity AC. Yeah, we need more coffee. Okay. Good news. XRP. Would you take a look at that one? We're going back fast and steady, fast and steady. I love that. We just witnessed and we just watched for like about an hour, which is good. Now, here it comes. President Donald J. Trump at 10:30 a.m. my time, which is going to be in about 40 minutes or so, which is nice. I'm excited, man. I'm so excited. Let me see the poll right now on the screen. What do we have? What do we have? 1.6 thousand votes. I am 60% bullish. Pump, baby, pump now. Love it. Love it, man. This is exciting. Thank you, Paul. You have just injected some confidence and trust in the markets. Plus, we have Donald J. Trump making a speech at 2 p.m. And some people are saying that he might reveal his Fed pick. Some people are saying he might reveal his Fed pick. If that's the case, oh boy, today I'm going to have to open some longs. So as I told you guys, and I told my community on Discord, right now I'm just buying all Bitcoin I can under $100,000. And I was able to get good Bitcoin at 80,000. Pretty happy about it. Yep. This is good, man. This is a good. So right now, for sure, we want to listen to what Trump has to say. It's going to be a lot of Q&As. Ethereum passing $3,000 ETH. We love that. We love those W's, guys. Messi scoring. Oh, no. Almost scoring. Oh, this is so good. Wow. Okay, I already ordered some food. Let me see when it's... Come on, man. Okay, there you go. Finally. My food is coming soon. Yeah, I was like, I want to be here for a while, so I got to get some energy. You know that, guys, you know. 2.15. That's great, guys. So, like I told you early in the live, and I just want to make sure everybody's aware because we have more money for you. We have the new 2,500 XRP giveaway on BTCC to everybody who is trading on BTCC, my community. It's another brand new month to end 2025 in the best shape. All you need to do is keep doing what you're already doing, trading on BTCC with my link. If you don't have it, just make another account and boom. From December 1st all the way to the end of December. So you have 29 days to drop a nice volume level. So you're going to win. We have a new winner too, and there's going to be more there posting. So just FYI, guys. We also have crypto.com. If you click the link down below for crypto.com, you're going to be signing up. And I have this one. So for crypto.com, guys, all you need to do is put the email that you created on crypto.com and come and join me on this form. So I give you free VIP status. Free VIP status, right? So make sure that you're using my link so it works. So FY. Free VIP status on the crypto.com exchange. I want you guys to get it. So sign up, follow the instructions, and you're going to be good to go. That's so good. This guy, we tried listening to this guy yesterday, but yeah, it was a complete nothing burger. It happens. It happens. 216. Very good, guys. Very good. No, we're doing extremely well. All right, guys. So I'm going to end this live. I'm going to eat a little bit as soon as my food is coming in. And then we're going to come back for Trump. And then maybe he's going to continue with his speech. We'll see. But it's going to be a day jam-packed with news and updates. So FYI. Okay? Good one, Paul Atkins. You didn't disappoint. Well done. And I'll be coming back soon right now. So subscribe to the channel, guys. Turn on the notification bells. And I'll see you on this same place just in a couple minutes from now for Donald J. Trump, his cabinet meeting. Cabinet meeting. It's going to be, the latest updates and, of course, Q&A. It always gets exciting. So I'll see you there soon. Peace. Thanks, everybody.